Business Partners has been around since 1991. The company says it signs off on loans of up to R1 billion a year. It was established to assist entrepreneurs with finance to purchase business equipment. But the company has come under fire over the years for adding a royalty clause to its loan agreement. It has also been taken to court over royalties. However, the company has won all these cases. It says this clause is meant to guarantee the company repayment of the loan in an event that the client is unable to make the repayment.
It is a way of deferring repayments to match the cash flow of the business. In some instances, we know after doing an assessment of the risk involved in funding the particular transaction that this is the risk and this is the pricing that will match the risk involved in us undertaking or doing this transaction. But the cash flows of the business are not able to afford it today. So we can keep the interest rates maybe flat at maybe prime or prime plus 1. And we say from what we see in the cash flows from year 2 or year 3, you'll have made traction in the market, and then there will be a clause that says now a percentage of your sales at that level when your cash flows permit will cover a royalty in repaying us for the risk that we've undertaken in supporting you when times or where the business was not feasible or able to repay at that particular moment.
Business Partners says it understands the frustration that this clause may cause to its clients. However, it is necessary for the company to include it in its loan agreements.
And oftentimes where we have a situation where unhappiness escalates is when the business is not meeting whatever targets that it had set for itself, and then have to meet what has been contracted to say, for the money that we put in, this is the return that we require. So that could be situations that have led to some unhappiness, but the majority of businesses actually are able, especially if they're trading at the levels that had been projected at the beginning.
Business rescue practitioners say royalties are there to protect the financier. However, some businesses question why they would still be liable to pay royalty fees after settling their loans. And in an event that the debtor undergoes a business rescue process, they would still be liable to pay off these royalty fees.
These royalties will continue, but under post-commencement finance. Whatever royalties were outstanding prior to business rescue is then ring-fenced. Anything post will be considered as post-commencement finance and must be paid.
Business Partners has urged entrepreneurs to seek loans for a specific purpose to grow their business. The company also encourages business owners to learn and understand the contracts they commit to. Nothando Makutulela, SABC News, Johannesburg.